Hey everyone, I recently covered a microcap company Max India that specializes in senior care service with a complete ecosystem around senior care that include residence for senior citizen, care homes for short and long stay, then home healthcare where company offers healthcare facility at home, then medical equipment and digital platform. When I covered this company, it was trading at around 160 rupee and then it immediately zoomed to touch high of 234. However, after the latest result, there is some correction in share price. At current level, company command a market cap of about 850 crore rupees. Since company is in loss, we can't look at its EV to EBITDA or PE ratio. But if you look at price to sale, it is trading at a price to sale of 4.5. Now if you look at long-term picture, there's a growing trend for nuclearization in India where the next generation is settling down in different cities and the demand for senior residents in India is expected to grow multifold times. And when it comes to senior citizen, healthcare is the largest share of their expenses. Hence, senior healthcare is a big market in India. In fact, it is already a huge market in the Western countries and I expect the trend to follow in India in the coming years. The reason I have shown my confidence in Max India is due to one of the best promoter pedigree in this space. Max Group is already a leading player in Indian healthcare space with Max Healthcare as a listed company that has a current market cap of about 82,000 crore rupees. Moreover, company has its presence in real estate with Max Estate that is also a listed company with current market cap of about 4,000 crore rupees. So basically Max Group has the expertise in both real estate and healthcare that makes it a leading player in Indian senior care space which is still in the nascent stages. Now I don't want to discuss the business model in detail. I would strongly recommend watching my previous video. In this video, I want to share the latest update from management after their Q3 results and share my perspective on current state of its journey. Needless to say, this video is only for educational purpose. The idea is to share my knowledge so that you can do your further research and make an informed decision. Alright, let's get started. So first of all, if you look at Max India Q3 performance, its revenues are down by around 6% and EBITDA loss have widened from 3 crore to 17 crore year on year and net losses have widened from 0.28 crore to 17.9 crore. So first of all, I am not surprised with the results. In the Q2 con call itself, management has clarified that they don't have inventory to sell in residence and hence there will be dip in revenue. But they said it's purely temporary. As we start selling more communities, you will find this number reaching up. Here please note that Max India is consistently generating positive cash from operation, but the cash is currently utilized in building residential apartments. Company is sitting on around 165 crore of cash in its books as of September 23 and total treasury and other assets stands at around 500 crore as of December 23. Now coming to the latest update. First of all, on the residence side, their 100% inventories are sold out in Dehradun. There was one unit left which got sold in January 24. 189 apartments out of 197 have already been handed over. On Noida Phase 1, all inventories were sold out by March 23 and construction work is on track for all 3 towers. Company would complete the construction of Phase 1 by March 25. For Phase 2, company is in talk with RERA for necessary approval. So that's the update on Dehradun and Noida. Now in my last video, I mentioned new projects under work in various stages across geographies like Gurgaon, Bangalore, Hyderabad and so on. Management mentioned that the definitive agreement has been executed for Gurgaon. The massing, designing and marketing strategy have also been finalized. They will have about 293 units of senior living with 0.72 million square feet area. For Bangalore, they have closed the terms for definitive agreement and are waiting for some final clearance. This is a 1.08 million square feet development with about 544 units. For Hyderabad, they have executed the term sheet. Currently diligence is on and within the next 1 month or so, hopefully they will close that. This will be the largest development for Antara with about 748 units in 2 phases with an area of about 1.3 million square feet. For the geographies of Chandigarh, Goa, Pune, active dialogue is on with landowners and hopefully we should be able to close something in the next few months. Please note that management has given a target of 1.5 million square feet of development every year with goal of creating 8 to 10 communities across top 5-7 cities with around 1500 to 2000 beds for care homes and then age-easy physical presence in 8 to 10 cities and growth in digital platform as well. So Max India is growing all its vertical, but the residence vertical contributes the highest in its business and would be the biggest growth driver for the company. Moreover, as the residence community would grow, company can leverage it to cross-sell other services and that's why I want to focus on this residential apartment segment. Now if you look at the details of Dehradun project, which was their first community, they had the land parcel of 14 acre with sellable area of 5.75 lakh square feet, where sale realization per square feet was 14,000 rupee. This project has generated a cash surplus of 125 crore as of December 23. However, in their Noida project phase 1, they sold the flats at an average rate of 10,400 square feet. They have sold all units in phase 1. This phase 1 is expected to be completed by March 25. Here the key difference is Max India has reduced the per square feet to 10,400 square feet versus Dehradun project of 14,000 square feet. Please note that the square feet rate directly impact the revenues and profitability. So there was an interesting question during con call where participant asked, we usually target the top 2% of our target addressable market with high disposable income. Considering the surge in Gurgaon and Noida real estate prices, are we looking at an aggressive pricing strategy for our phase 2 at Noida? On that, Mr. Rajit Mehta mentioned that, yes, why would we say no to that, to be honest? And we are also looking at aggressive pricing for Gurgaon. But yes, you are right, the market is doing well. Although he said that we do a lot of research and study on what prices the seniors can afford, what is the market price, and we make sure we are priced appropriately. But the market is buoyant at this point in time and will take full advantage of it. In fact, management mentioned that when they launched Noida Phase 1, the price was between 6,500 to 7,000 square feet. And the last price they sold was over 10,500 to 11,000 square feet. So clearly there's an upsurge in real estate sector, and it would be interesting to see if Max India can take advantage of this upsurge in Noida Phase 2 and the Gurgaon projects. Another question was on expected top line in the next 5 years, where management mentioned that by FY29, they're expecting revenue in the range of 750 to 850 crore. In FY23, the revenue stood at around 200 crore, so that's around 3.5 to 4.5 times growth in top line expected in next 6 years. Although they did not guide for EBITDA target, and I understand that because company would be investing the money for future growth, and hence it won't be right expectation to ask for EBITDA growth at this point in time. So this is the latest update on Max India. Like I said in my last video, it's a macro cap company with a current market cap of around 850 crore rupees, catering to senior care segment in India, which is currently in nascent stage, but it would grow massively in the coming years. Max Group is very well positioned with expertise in both healthcare and real estate. Although at EBITDA and net profit level, company is in loss, but that's because company is investing in building the assets. So it would take a few years for the company to become profitable. But the key focus here is company's future plan, where they intend to build around 1.5 million square feet of residential area every year, and goal of creating 8 to 10 communities across top 5 to 7 cities of India. I've already shared the development across Gurgaon, Noida, Bangalore and Hyderabad. On numbers, company has given a guidance of revenue in the range of 750 to 850 crore by FY29 versus their FY23 revenue of 200 crore. But it will take some time for the company to become EBITDA positive. Now you need to decide if you want to ride this mega trend of senior care at an early stage or wait till Max India start getting profitable at EBITDA level. Now tell me in the comments, do you think senior care has potential in India for next 10-20 years? And if is it worth betting on the Max India for long term or not? Thanks for watching this video. I'll see you next video. Till then, take care.